Here's a brief look at 2016 hotel profitability derived from over 5,200 hotels and resorts nationwide. Revenue for the hotel industry hit a record level of $199 billion in 2016. This falls about $17 billion shy of Apple's annual revenue, but is more than 100 times the revenue generation of Airbnb. Rooms totaled $149 billion, accounting for 75% of our industry's revenue. 4 hotel companies alone made up almost half of U.S. room revenue. Food and beverage revenue totaled $38 billion last year, and other income comprised the remaining $12 billion. Rooms revenue grew 5.1% in 2016, driven by growth in demand and a modest increase in room rates. Food and beverage revenue increased 3.4%, which is lower than the overall growth of eating and drinking place sales. And other income increased a mere 1.5%. On the expense side, departmental expenses amounted to 36% of total revenue. Undistributed operating expenses accounted for an additional 26%, fixed expenses totaled 12%, and 26% fell to the bottom line for net operating income. Payroll comprised 42% of all expenses. The industry spent $61 billion on payroll, including salaries and wages, taxes, and benefits. Payroll increased 4% in 2016, the largest increase of any controllable expense. A few key factors are driving the growth in payroll burden. Unemployment currently sits at its lowest point in 10 years. It is expected to slide further by the end of the year, making the job market more competitive. Minimum wage is on the rise in many major cities as living wage legislation is taking hold. In a survey of 60 major cities, 42 have local minimum wages above the $7.25 federal mandate, and 12 have minimum wage thresholds above $10. Furthermore, 1/3 of these cities will raise their minimum wage by more than 5% this year. The overall cost of employee compensation in general is increasing in the U.S. as well. The average hourly cost of employee compensation, including benefits, rose 3.3% in 2016. Another major expense that saw a notable increase last year was property taxes. Our industry paid $7.5 billion in property taxes in 2016. This reflected a 5.2% increase over the prior year. This is not all that surprising given the escalation in property values in recent years, with per-room value increases of 15.3% in 2014, 8.7% in 2015, and 7.1% in 2016. Rising values coupled with rising tax rates yield higher property tax collections from municipalities. Property tax collections increased 4.5% in 2016. The industry seems to be controlling expense creep for most other operating departments, with the majority below or within range of inflationary growth. Utilities, which account for $6.8 billion in costs, have been a positive for cash flow after declining 3.6% in 2016. Utility costs overall have been on the decline. The average price for electricity for the commercial sector dropped 2.6% in 2016. The average price for natural gas for the commercial sector declined 6.5% last year. On the other side of the coin, energy consumption has been relatively stagnant over the past decade and slid 0.3% last year. Overall, net operating income for the hotel industry was $52.6 billion in 2016, a modest 2.9% increase. The profit margin for the industry tapered slightly in 2016, but remains near its peak level above 26%. The slip in profitability was the result of weak flow-through last year. With only inflationary growth in room rates, the percent of incremental revenue that dropped to the bottom line was a mere 17%. With similar rate growth anticipated for 2017, flow-through is expected to remain relatively low this year. Nevertheless, profitability should remain at a high level. More data and insights on the hotel industry's profit and loss can be found in the 2017 HOST Almanac, available now at str.com.